Welcome to SG Investment. Our channel is dedicated to helping you make informed decisions about your money and to guiding you on your journey towards financial success. Subscribe now and join our community of like-minded individuals on the path to financial freedom.
How to invest for beginners: 10 investment strategies for beginners.
Investing can seem like a daunting task for beginners, but with the right strategies, it is possible to build a successful investment portfolio. Whether you're saving for retirement, a down payment on a house, or a child education, investing your money is one of the most effective ways to grow your wealth over time. In this guide, we will explore 10 investment strategies for beginners, including setting financial goals, creating a budget, investing in index funds, and diversifying your portfolio. By following these strategies, you'll be well on your way to achieving your financial goals and building a brighter financial future. 1. Start by setting financial goals. The first step to investing for beginners is to determine what you want to achieve through investing. This could include saving for retirement, a down payment on a house, or a child's education. Once you have set your financial goals, you can develop a plan to achieve them. 2. Create a budget. Before you start investing, it's important to have a clear understanding of your current financial situation and create a budget. This will help you determine how much money you can afford to invest each month. By setting a budget, you'll be able to prioritize your spending and make sure that you have enough money to meet your investment goals. 3. Consider a Roth IRA. A Roth IRA is a type of individual retirement account that allows your money to grow tax-free. Contributions to a Roth IRA are made with after-tax dollars, but the money can be withdrawn tax-free in retirement. This can be a great option for beginners because it allows you to invest for the long term without worrying about taxes. 4. Invest in index funds. Index funds are a type of mutual fund that track a market index, such as the S&P 500. They offer a low-cost way to invest in a diversified group of stocks. By investing in index funds, you'll be able to achieve returns that are similar to the overall market, but with lower fees than actively managed funds. 5. Use dollar cost averaging. Dollar cost averaging is a strategy that involves investing a set amount of money at regular intervals, regardless of the stock market's performance. This can help to reduce the risk of investing a large sum of money all at once, and can also help to take advantage of market fluctuations. 6. Diversify your portfolio. Diversification is a key principle of investing. This means spreading your investments across different asset classes, such as stocks, bonds, and real estate. By diversifying your portfolio, you'll be able to reduce the risk of losing money if one investment performs poorly. 7. Learn about risk. All investments come with some level of risk, and it's important to understand this before you invest. Some investments, such as stocks, are considered to be higher risk, while others, such as bonds, are considered to be lower risk. It's important to be comfortable with the level of risk you are taking on, and to invest in a way that aligns with your risk tolerance. 8. Invest in what you know. It's easier to make informed investment decisions when you have knowledge and understanding of the industry or company you are investing in. Beginners should focus on investing in companies or industries that they are familiar with, and that they believe have a good chance of success in the future. 9. Avoid the common pitfalls. There are many common mistakes that beginners make when investing. Some of these include chasing hot stocks, timing the market, and investing in high-cost funds. By avoiding these common pitfalls, you'll be more likely to achieve success as an investor. 10. Keep your costs low. One of the most important factors in achieving investment success is to minimize investment expenses. Avoid high-cost funds and unnecessary fees, and look for ways to reduce the costs associated with investing. This will help you to maximize your returns and achieve your financial goals. It is also important to seek professional advice before making any investment decision. A financial advisor can help you to understand the different types of investments available and to create a diversified portfolio that is tailored to your goals and risk tolerance. Conclusion. In conclusion, investing for beginners does not have to be complicated or overwhelming. By following the strategies outlined in this guide, you can start building a solid investment portfolio that will help you achieve your financial goals. Whether you're just starting out or have been investing for a while, it's important to set financial goals, create a budget, invest in index funds, diversify your portfolio, and understand the level of risk you are taking on. Additionally, it's important to invest in what you know and avoid common pitfalls, such as chasing hot stocks or timing the market. By keeping your costs low and seeking professional advice, you can maximize your returns and build a brighter financial future. Remember that investing is a journey, so be patient and disciplined in your approach. Thanks for watching. Don't forget to like, comment, and share.